Hey folks, David Frost, MyStrategicForecast.com. You're here for another episode of Common Sense Market Analysis. Today is Tuesday, January 6, 2015. You're looking at a daily chart of the SPY, and if you go back to last night's video, I'm actually looking at my notes from last night, and I told you that the first downside target, and I did expect that to hold, at least for a few days, at worst case, was 199 to 199.50, okay? Here today, the low was 198.85. That's pretty good. But this chart here, this red bar here doesn't tell the whole story. So let's go to the intraday chart because it's very interesting what happened today. Okay, market opened up here and we rallied up into somewhat of a high today, and then the market rolled over right at about 10:20, 10:30 in the morning, okay, and we went down to this low. The low was hit at 198.85, okay? Then we rallied all the way up, okay? We hit a high of 201.35. That's a pretty good move off that bottom. So that number was good. So that number shows you that there's a bid underneath the market there, and there were buyers that stepped in, not afraid to buy that level, okay? So then at the end of the day, the market rolled over. So let's go back to the daily chart, and we'll talk about what to expect from here. Okay, so well, remember I told you that tomorrow is a cycle turn day for a lot of different markets. It's a cycle turn day, in my book anyway, for the S&P, plus or minus a day. It's a cycle turn day for interest rates and the bond market, and it was a cycle turn day possibly for even crude oil, and we'll get there when we get there. Actually, there was another market, and I don't remember. Oh, it was the dollar. I think it was a cycle turn day for the dollar. Anyway, well, let me go back to my notes here. Yeah, it was the dollar. Okay, so what I have here is if we scale down tomorrow, the next target, you're going to have some support here at this low from December. And then your next real heavy level of resistance is the 200 period moving average. And if we continue down there, and I'm not saying tomorrow, but if we continue on a sell in this market, then you're going to go all the way to this gap window here down at 191. We'll call it 191.50. And if it comes down there on heavy volume, on a heavy hard sell, you can certainly overshoot that level. But that should hold also. So there's your next targets if the market does sell. But I do have a plus or minus tomorrow, Wednesday, turn day. So the minus is gone, right? So it's either tomorrow or Thursday at this point. So we'll see what happens, and we'll play it one day at a time, but I'm expecting this market to hold, and if it doesn't, we know where the next targets are. But if you're an intraday player, if you're a day trader, and you were paying attention to that 190 to 190.50 level, there was some good coin to be made at that bottom today, and as long as you played it correctly and trailed your stop up with the market, you got stopped out late in the day, and that was that, and that's fine. That's how we play it, all right? The other thing I want to discuss is the IWM, okay? The IWM was down significantly more than the market. It was pretty much down 1.7% today, and the S&P finished down 0.89%. So that's a pretty big difference, almost double. So what I'm thinking is, there's two things going on. I do have a cycle turn day tomorrow, and that's not to say that the market can't go down tomorrow and then turn on Thursday. Okay, that would count, right? That's why it's plus or minus one day, so now we're plus one day. The fact that the IWM was relatively weak, or I should say weak relative to the S&P, that tells me that we're certainly not out of the woods, and the fact that the market rolled over, the S&P rolled over at the end of the day today, didn't finish on the lows, but it started heading right back to that double bottom from earlier in the day. That tells me there's still sellers out there, and they're still putting pressure on the market. So we'll have to see. It was a good fight today. It was bulls fighting bears, bears fighting bulls all day long. You had a big sell, a big rally, and then a big sell. So I don't know of anybody that can catch all three moves like that, but certainly caught the one off the bottom. That was nice. So let's go on to the gold market. All right. Gold market is had a nice move today. Okay, the spot gold price went all the way up to 1223 today. And yesterday I told you that my target, and this was like a January target, and it was kind of all done in almost one day, was 1240 to 1245. So what I think is going to happen here, we could have some more upside, and that translates to this double top here, more or less, give or take 50 cents, right? So it translates to this double top where I think the market would find a fair level of resistance up here. And, there's only another, let's say, $2 from where we finished today. Not only, I mean, $2 is $2. $1.50 to $2, we'll call it, in the GLD. But after that, we have to see how the market reacts off that. I'm not saying it's going to collapse. I'm just saying we see how the market's going to react off that, what kind of pattern it puts in, and then from there, there's higher prices ahead in 2015. And, I've been telling you that for some time. So that story seems to be, at least in my book, holding true for the time being, ready to play out. Looks like it's going to play out in my book. Let's go over to the USO, and we'll talk about crude oil for a second. And, for several weeks now, I've been telling you 48 was a number, and basically we got there today, give or take a few pennies. I think we broke 48, finished at 48.02. But here's the deal. Okay, there's still, you see, there was good volume on the crude oil today on the downside, good volume in the USO today. Volume in the USO was 42 million shares. Average volume is something like around 15 million shares. But of late, the last, let's say, 90 days, the average is slightly higher, but it's still nowhere near 42 million. It's probably more like 20 million. But, you still haven't seen a reversal day. And until we see a reversal day, there's still going to be downward pressure in the crude oil market. So where's the next downward target? Well, like I said yesterday, now it's going to be 45, and then either 42.5 to 43.5 is probably the number. I don't think we go below that. At least I don't have any number below 43. Really, 43.5 is the number. I don't have any number below that on my my mathematical calculations, my charting patterns, all my retracement levels. There's just nothing below that number. So if we go below there, we go below there, but I can't find it. So, we just wait for the market to fall. It's falling. We wait for a reversal day. You're not going to catch the bottom. Trying to catch a bottom is a tough business. It's a fool's game most of the time. But what we do is we wait for a signal, a high volume reversal day where the market throws up, usually in the morning, and then by the end of the day, it finishes up and that on high volume, and that's usually deemed a reversal day, and that usually holds at least for a while. We haven't seen that yet, and market tried to put in a reversal day on high volume over here on the 16th of December, but it really didn't qualify as a reversal day. It did have high volume, but it wasn't a reversal day, and the market rolled over again. So that's where we are, and we'll just keep watching it, and as soon as I see a reversal day, I'll just let you know. It's that simple. Okay, TLT. All right, TLT had a monster day today. Okay, bond, that means the long-term bond. The TLT represents the 20 to 30-year Treasury bond. Okay, look at this rally we're having right here. So the interest rate market is the exact opposite. All right, so the 10-year interest rate is TNX. So let me bring that up for you. TNX right here, and this, what does that look like? That looks like it wants to put in a bottom, right? That looks like a bottoming tail. You're at a low in the chart. It looks like a bottom, smells like a bottom. We'll have to see if it's a bottom. Well, remember what I told you. Wednesday, tomorrow, is a reversal day. I'm sorry, not a reversal day. It's a turn day for the stock market, right? S&P, the bond market, which represents TLT or interest rates. Either way, it's the Treasury bond or the interest rates. Okay, so either one's going to reverse. Interest rates reverse higher, bond market reverses lower, and the dollar. And we'll get to that in a second. But here, let me make a note so I don't forget. Okay, so we'll see what happens. But if you look at TLT, let me show you something that's just a little interesting. Okay, let's just give you a little indication of some of the things I look at that I don't always discuss on air because I try and make these videos as quick as possible, just so you get the picture. But where we are in a weekly chart, okay, where are we? We just pierced today this double top, all right, and then we reversed a little bit. Well, we'll see. This should provide, this over here, this should provide a decent level of resistance up here, and the market should pull back. I mean, look how extended we are, okay? We're ways away from the 20-period moving average. We should see a pullback here, and if tomorrow serves me right, we should see that pullback. Let me switch gears for a second before I get to the dollar, and let me talk about something that I talked about that I forgot to talk about last night. I put in the email that went out to members and subscribers, but I know some folks who just watched the videos had some questions. Seadrill. You know, I have been talking about Seadrill, and I just want to make mention that it was a stop out. All right, let me go to the daily chart. I'm going to show you why. Okay, so if nothing else, it's just a lesson of how risk management works, right? We were taking this level here and this low, okay? This was a bullish pattern inside this green bar high, okay? So we had a long consolidation pattern on a daily chart, and the low was $11.18. And I said if you close the day below 11.18, you're out. Okay, so yesterday, late in the day, the market was going to close below 11.18. You're out. Okay, today what happened? Went down again. So that's the story in Seadrill. Now, the market basically took Seadrill down, but this pattern will play out like 75-80% of the time. Well, this was one of those 20-25% times. But if for nothing else, if you took the trade, you know, it sucks, I know, but if for nothing else, and you learned a lesson on how to risk manage your trading, right? So maybe you find a double bottom here, and maybe it reverses up, but I don't play that game. I have my numbers. I stop out when it says stop out, and I just move on, and I don't really look at it again until I see another pattern that looks good enough to take another trade. And that'll serve you well, because a lot of folks, what a lot of the amateurs do, and the retail investors and the folks that really don't know what they're doing, is they'll take a trade, wherever they take the trade, based on whatever it is, fundamental analysis, some nonsense, some analyst said something, it's their neighbor, the guy in the elevator, whatever it is. And they take a trade and it goes down, and they just hold it, and they don't really have any kind of risk management process. So they don't know where they're wrong. They just know that they're losing money. And then usually, in a case like that, they're usually capitulating out here right at the bottom, and then the market reverses up for $1.50, $2. That's usually what happens to those folks that took the trade up here, right? But I don't play that game, and I just lick my wounds and move on. But all in all, you know, if you took the trade up here, okay, at 11.70, let's just say, right? And you're out at, let's just say $11, a 70-cent loss, not the end of the world. You know, it's not a $2 loss. It's not a 20% loss. You know, we just don't play that game. So if for nothing else, it's just a lesson learned. We watched it for a while. We watched it for about a week or so, and it looked like it was going to play out. And look, frankly, had the market been up yesterday and today, this Seadrill would have likely been up yesterday and today. But that's just the way it goes. We're in a risk business, and you have to manage risk, and that's the bottom line. Before we sign off tonight, I'm going to look at the UUP, which is the ETF that's a proxy for the dollar. And while this isn't a reversal signal, certainly it's an extended chart. And, you know, what we're going to look for is this is extended, right, away from the 20-period moving average, probably a little bit too far. So this market is ripe to pull back, just like interest rates look like they might have bottomed today. They're ripe to reverse. The TLT, which is the Treasury bonds, look like they're ripe to pull back. And if all goes well, maybe the market either, you know, it might go down early in the morning and reverse, and that could be the whole cycle day playing out. We'll see what happens. Again, it's Wednesday plus or minus a day. Minus is today, so that's off the table. So it's Wednesday plus 1 day, which is Thursday, and we'll see what happens with all these markets and if we get our cycle turn day. I'm David Frost, MyStrategicForecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.